Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, December 9th, 5:48 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what's important for next week, and update the world famous 21 over 21 list. It's actually not going to be updated with the week close the last 30 minutes. A lot of stocks were right on the edge of the 21 and some failed off, and I just haven't had time to go through and curate it. So we're going to kind of curate it in real time, and then I'll update it on Monday with after my weekend review. So, state of the market, fading bear market rally. Got some hope yesterday, gave it all back today. You can see over here on the trend gauge, we've downgraded leaders from bullish to neutral. Just too much lack of progress on what's going on, and really it's a factor of what's going on with the market with the big CPI and FOMC decision next Tuesday and Wednesday. It's just going to be an absolute volatile mess. As far as the major indexes go, all five are below the 21. We didn't get two closes below, so we're not totally on bearish downtrend yet. We've been playing ping pong above and below the 21 on a few of the indexes, so that's neutral. Medium term, the 50-day moving average, all five still above the 50-day. Small caps coming down and actually sitting right on top of their 50-day right now. Long term, it's been a mess the last 2 weeks, back and forth above and below the 200-day moving average, so we're neutral there also. We'll go through all the charts here as we always do, and you can see exactly where we stand, and then understand that probably where we stand doesn't make a whole hell of a lot of difference until we get some clarity next Tuesday and Wednesday with the CPI report and the FOMC. Now, before the market today, what just happened is PPI came in. That's producer inflation measurement, and all metrics were worse than expected. And the futures went from 0.5% up immediately to 0.5% down. Slowly clawed its way back. We opened down about 0.25%. Got to positive during the day, back above that key 39.60-ish level where the 21-day is, and spent most of the day above it, but then just a slow bleed in the afternoon led to a breakdown below 39.50 the last 30 minutes, and we closed near the lows of the day. So as far as what just happened, that's an ugly end to an ugly week. Red is not a good color when you're talking about the stock market. So G6 down 1.33% today, S&P down 0.73, NASDAQ 100 down 0.64, Dow down 0.9, mid-caps down 1.06, Russell 2000 small caps down 1.2, Global Diversified 60/40 down 0.48, in-house GROTECTION took some profits early in the day. That stymied the sell-off later in the day. Green most of the day, but faded the last 30 minutes, down 0.19%. Now for the week, growth stocks really smacked, down 7.04%. The S&P on the week down 3.4%, NASDAQ 100 down 3.6%, Dow down 2.7%. Small and mid, they led for a while. They're not leading anymore. Mid caps down 4%, small caps down 5%. Global Diversified 60/40 stock and bond down 1.76%. Bonds cushioned that quite a bit, although they were slightly negative. In-house GROTECTION down 2.39% on the week. I'll review the week when I get to the tail of the tape, and then we'll go through the 21 over 21 list, the state that it's in now anyway. So what do we do at Revere? We are a registered investment advisor, registered with the SEC, and we are an active manager. Our flagship portfolio is called GROTECTION. We attempt to grow assets during uptrends and protect them during downtrends. I looked at 2020 a bit this year. Let's look at 2021 last year. You can see we trended higher most of the year, mostly bouncing off this 50-day moving average. When you're in an uptrend like this, we are primarily long, When you're above all three of the moving averages, the green is the short day, the red is the intermediate term 50-day, the green is the short term 21-day. The red is the intermediate term 50-day, the black is the long-term 200-day. Not a touch of the 200-day all throughout 2021. So we were in various stages of fully invested and about 75% invested as we bounced around the 20 and the 50-day. It was a kind of a choppy year, and it wasn't a good year for growth. Let's look at IWO on the year, and this pretty much summed it up. We underperformed last year because look at that chop relative to the uptrend that we saw in the big indexes. This was one of the drivers for some changes that we made mid next year to focus half the portfolio on indexes to smoothen the highs and the lows in the portfolio, and it's helped. We've lost significantly less than the market this year. You can see the market, as you've been following us, you know the market rolled over hard in January this year. This is our stops will kick in when this happens. We'll get lighter and lighter, bounce around the 200. If the slope of the 200 and you start spending time below the 200, this is when we really kick up the defensiveness because we want to avoid this. These are 13 bear markets going back to 1970. You can lose 20, 30, 35, 40, as much as 57% of your capital in a severe bear market. If you're approaching retirement, you can't afford that. That's why we get to a maximum defensive posture when we break below the 200-day moving average and then wait for short-term signals to get us back in to where we're trending above the 200-day moving average, and we want to get the slope of the line. It's really flattening out now as some of these bounces have softened the downtrend, but we failed to get at the 200-day moving average early this week. That's not a good sign. And then we closed the week under the 21-day short-term moving average. The 50 is below there. We lightened up half of our exposure after closing above the 200 last week as the week progressed. So if you're interested in an approach like this, give us a shout. Email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. So here's the S&P 500. Let's take a look at it on a 5-minute chart. Gap down, nice. Move higher. No, we're going down. No, we're going higher. Made highs above yesterday for about 30 minutes. All that was a false breakout. We spent most of the time within yesterday's range until this breakdown around between 330 and 340 today. Really heavy selling going into the close. That's not the way you want to close the week. And we took a couple more stops hit. We did offensive selling in the morning, defensive selling in the afternoon, and we'll go through it when we go through the tail of the tape. So the bottom line is we closed below the 21-day moving average, back to 2.6 below the 200-day moving average, still above the 50-day moving average. NASDAQ 100. For a change, Tesla was the only one of the big 7 that were green today. But we failed at the 21-day exponential moving average on the NASDAQ 100 too, still above the 50-day. Dow Jones Industrial Average, this has been the leading index. It hasn't led the last 2 days, though, a little bit of relative weakness, and ran into the declining 8. Very often the 8 handles the trend, and right now none of the indexes can get back above the 8. And the rollover at the end of the day took us back to below the 21. Mid-caps, MDY, also got into the 8 and the 21 and reversed there, closed right on the 200. Note the relative weakness over the last 4 weeks on mid-caps and small caps. Also showing relative weakness over the last 4 weeks. Ran into the declining 21 yesterday, couldn't even get there today, but closed right on the 50-day moving average. Let's look at a couple of the equal weight indexes. RSP, this is the S&P 500 down pretty much in line with the regular S&P index, sitting on its 200-day moving average. QQEW is the NASDAQ 100 equal weight, down worse today as Tesla really cushioned Tesla and, well, no, NVIDIA gave it up by the end of the day. So Tesla cushioned the big caps, but we are sitting on the 21. We didn't break below the 21 on the equal weighted NASDAQ. A couple more key charts. The VIX, we've been focusing on this and how it's came off that 20 level that coincided with the sell-off. Back above the 21, it's been playing ping pong, just opposite of what the indexers are doing versus this 21. It's come off of oversold and is heading higher now. That's bearish for the market. Dollar, UUP, still holding on near this tight range. Let's take a look at this on a 15-minute chart, and you can just really see how tight the action has been for the last 1, 2, 3, 4, 5, 6, 7 days. Since this gap down on the dollar on December 1st. And that coincided with 12-1. That coincided with a move up in the indexes, but no further progress to the upside, but not breaking down either. Something's going to give with the dollar next week too, with the news. Let's now look at the broad bond index, BND. Pulled back, riding the 8 EMA higher. Actually, this is a very nice uptrend for the broad bond index. 2-day pullback after making a higher high. If it's pulling back, prices are pulling back, you know the rates are going higher. Let's look at TYX. This is the 30-year. Quite a bit oversold. 2-day bounce now just into the 8 EMA. Could have a long way to go to get back to the 21. And the 10-year also priced down on the day, which means yield up 2.18% above the 8 EMA. Junk bonds, despite stocks being down, no fear at all in the junk bond market, continuing to ride the 21 higher, outperforming the S&P 500. With the dollar up today, gold up also. Poked its head above, but closed right below the 200-day moving average. You know, we've been fighting with that level for a while. Gold stocks were down on the day, again, early above the 200-day moving average, but failed. Silver's been the standout, making higher highs, bounced off the 8 EMA in a big way. Really nice action, really strong relative strength on SLV. Finally, Bitcoin down 1% today, still in this really tight range. A little bit higher over the last 7-8 days than it was during this FTX collapse, but Sam's going to testify on Capitol Hill next week. I'm sure that'll be interesting. He's donated a lot of money, so therefore he has a lot of fans on Capitol Hill. So those are the major indexes. Let's move along to the tail of the tape, and then we'll get to the 21 over 21. Negatives on the stochastics. Put call elevated today at 1.18. VIX back above the 21 at 22.83. Fear and greed now in the neutral category at a 54. This bull case fading. I still have it in yellow. We haven't completely broken down. Really, these are in a holding pattern until we get the reactions Tuesday and Wednesday. Some news, as I mentioned before the market, PPI wholesale inflation, all metrics worse than expected, and the market dropped 1% in 5 seconds when that happened. Our day count went from up 1 to down 1. Expectations were neutral coming into today, broke back below the 21. That skews them more towards negative. Broke below the support and resistance level in the 39.50 and the 21-day. NASDAQ 100 between support and resistance. You can see the volatile move today, the gap down 0.25%. Dropped down to 39.44, up to 39.70, based, broke higher, fake breakout to 39.77. Slow bleed lower and then dumped at 340 to the low of the day. Sector standing out, the dollar, as I said, was strong. Bond yields strong. Gold and silver strong. Junk bonds strong on the downside. Bond prices, oils, medical and biotech got hit hard today, and XME base metals hit hard today. Here's our focus list. We'll go over them, which includes a minefield in Dexcom. We'll take a look at that, and then a gap up on a good earnings report from Broadcom semiconductor stock, and then Apple, see if how it's doing around the 140 level. So in-house, what do? We hit +2 R, so double what we lose when we with our stop. And in a choppy market like this, been saying it for a while, you got to take profits when you have them. So we trimmed half of Steel Dynamics and half of Netflix. We'll look at those charts when we go through the focus list. And then when we broke out above 39.50 after that recovery, we took some of our hedge off. Then we broke back below it, took some of our long off. So the ultimate was to reduce the beta down to about half of the S&P 500, basically a little less risky than a 60-40 portfolio going into. I wouldn't expect to see any more risk with that going into next Tuesday and Wednesday. Bottom line, ugly end to an ugly week. CPI and FOMC next Tuesday and Wednesday. I think I've said that 5 times now. You're probably getting the hint. So you can see where we closed, breaking back below the 21 in this 39.50, 39.60 area, but holding on to huge support area here between 3900 and 3930. You've got the 100-day moving average, the 150-day moving average, and this big support resistance area from May, June, July, and September, right around 3,900. So a lot of support, but with the volatility next week, it'll act like it's not even there if it's going to go lower. So let's get to the 21 over 21 list. Now, actually, first, I've got a couple stocks on here from the focus list that I want to take a look at that aren't in the 21 over 21 list. And let's start off with Apple. The key to the indexes, the key snapped off in the lock, couldn't get back above the 50 and the 21 today, is holding on to 140. I'll move my stop or my alert up, but let's put it back at 140, key level there. Apple's got to do something if we're going to get the indexes to participate. I will bring up Tesla since I've been beating it all week long with the ugly stick after 4 days down, one nice day up. For the week, however, down 8%. That's an ugly chart. The other one I wanted to look at, AVGO, Broadcom, big gap up right to the top of the range. But look what this did beforehand. Big move up on the Powell press conference, 5 days down, right into the 21, bounced, big gap up on earnings right to the top of the base. Nothing's getting past the breakout level this week, especially when we're waiting on the big news, and closed closer to the bottom of the range, but definitely something that goes on my watch list and my gap list. And then from the I can't catch a break department, we didn't own it, but considered it. Dexcom, this has been basing very nicely, volume drying up down to the 21, came off the 21. They had that news of the FDA approval yesterday. It gapped up, closed mid-range, and then basically all medical and biotech stocks sold off today. So those questions I always ask when you see something that's down, what's the sector doing? XLV was the losing sector in the S&P today outside of oils. And biotechs, big cap biotech down 2%, small cap down 2.5%. So if you bought the strength, you're in the red. It's sitting right on the ADMA and above the 21-day exponential moving average. So let's get to the 21 over the 21 list now. And I did add 2 stocks to it because I punted to actually 4 for certain. So we'll take a look at the ones that we punted, and then we will take a look at inverse order for the ones that were added. I added those 2 inverse ETFs because we own them, and we're tracking them versus the 21-day moving average. So why not put them on? So let's start off with what was punted this week. Halliburton, goodbye. Oil stocks, 5 down days this week. Relative strength lagging. We started to point this out on Monday to everybody, and then followed up on our podcast yesterday. Hess. This is the international. They're tied the most of the big international ones to Europe. Didn't matter. Down 5 days this week. First Solar, we got stopped on this earlier in the week after re-entering it last week. Broke the 21 and then 3 closes lower. So this is just a case of a leading stock just going to hell over 7 days. Tried to make new highs, didn't. Rolled over, broke the 21. Wouldn't be surprised if it bounced at the 50-day. But again, what happens next week is going to have the reaction is going to have a big impact on pretty much every chart out there. And then finally, another one we got stopped on this week, ANET, broke below the 21, flagged for a little bit, tried to get back above the 21 today, but then faded. When you see the stochastic roll over, don't hesitate to take something off, especially if it's close to breaking the 21. That was a lot of momentum this week, and you can see what happens when that momentum kicks in. So those are the 4 that got booted off. So the first 2 that are on here were added this week. If it's got a flag next to it, we own it. And the first one, this is Alex has been looking into this, and we've been discussing it for a while after this move up, going sideways. They've got an absolutely amazing product. This is still a small cap, $1.8 billion market cap, trades right about 25 million a day. We took a small 1% position in this day. This is one that we're going to give it some room because of the story. We'll still only lose 0.1% if it breaks below the 50-day moving average with that 1% position that we took. So amazing story. Transmedics, we'll talk a little bit more about it next week. But we've had some success with these smaller ones that we got into, and we've been able to ride out the volatility on them, such as Mobileye. So we'll give it a chance to prove itself. It's being accumulated. We've read quite a bit about it, and it's pretty impressive. Massive sales growth. You know, if the sales growth is there, it's going to lead to earnings growth. But obviously, the market might have something to say about the progress of it. The next one is one I've been watching for a while. ELF, 4 weeks tight, coming down to the 21. Let's see how it reacts to the 21 next week. Stellar fundamentals for it, 99 relative strength rating. Both on a 3-month, 3-month is in 96, year long is in 99. We've watched this stock go from something that's just too thin for us to something that we could get into if it started working well. And then the first of the inverse ETFs that were in SARK, this is the inverse Cathie Wood sitting right on the 21 and bounced today. And inverse financials, as financials, banks in particular, got very weak on Monday. That's riding the 21 higher also. So those were the 4 that replaced the 4 that got punted out. The rest of these were in since last week. Some of these are going to be below the 21. And like I said, I'm going to curate this more over the weekend. Relative strength high, right here, blue ball, you got to like seeing those in the portfolio or in the list, not in the portfolio, but KLAC semi equipment companies have been showing serious relative strength over the last few weeks. Schwab, very tight. Looks like it closed just a tiny bit below the 21. Yeah, 0.1%. Volume drying up. Deckers sitting right on the 21, 5 below. Closed right on the 80 EMA. Not going to give this much more room. This is where it should bounce, but we're going to need the market to participate. After those rules that I talked about yesterday, Netflix gapped up very strong on an upgrade, and we hit our +2R on part of it while it was oversold on the 5 or overbought on the 5-minute chart. We took our profit in here on it, and that was pretty well timed. It gave up $9 by the end of the day. We do use that stochastic, the 5 and the 1, for timing. When we made our mind up about selling something, we use those to time the entry and the exit better. It's a good tool. Celsius, we took our profits in this earlier this week. Our +2, we locked it in, sitting right on the 80 EMA. ON semi, very volatile. above and below the 21 this week. Boeing, 2 days in a row now, there's been announcements that countries are buying, or companies are buying a bunch of planes that gapped up, and then it faded throughout the day, both of these days. But right now it's sitting right on the 21. Still excellent volume patterns. Accumulation distribution is an A. The relative strength looks good. It's trending higher above the 21. Wingstop, very volatile. Ended up the week below the 21 with the 21 rolling over. Mobileye, good week after reporting earnings. Looks like a new high close, or actually all-time high close since it just was an IPO. This is one of those thin ones that we've got a 1.5% position in, and we've been able to sit through the volatility for it while it just works its way higher slowly. We're actually at a plus 2R on this with the gain and the size that we have, but we're not going to cash that in yet since the size of it is so small. Caterpillar ended up below the 21. Impinge sitting basically right on the 21. A lot of tight consolidations this week, and then some like AEHR are incapable of being tight. Big day down, 2 big days up, another day down. Very wide ATR on AEHR. O'Reilly finally gave up the 21 after trending above it for 4 or 5 weeks. Scorpio Tankers continues the story of getting energy to Europe. Continues to be good for it. One shake below the 21, back above it. Eli Lilly gave it up. As I said, basically all medical stocks were weak today, and biotech. They're typically supposed to be a leading sector headed into recession. Maybe it's just moving some money around, but the price and the volume is the price and the volume. Steel Dynamics, as I said, we took half of this off also at our plus 2R, pulled back a little bit by the end of the day, and that's going to wrap it. That's your uncurated 21 over 21 list, and that is going to wrap the week. Remember, as always, not how much you make in the market, it's how much you keep. It's why we get the defensiveness up under the 200-day moving average. That's where all the heartbreak occurs in the market. Typically, from the high to the break of the 200-day is about 12%. It's very typical to bounce around for a few weeks around it. But when those sell-offs start, you got to be ready to get out of the way, because this is where, as I said, that's where all the carnage happens, is under the 200-day moving average. So wrapping up the week ending 12/9, very interesting week coming at us next week. Stick with us. We will keep you posted on everything that's going on, what's strong, what's weak, and what we're doing. So that's going to wrap it. Don Vandenbord at Revere. Appreciate you staying with us. Have a great weekend. Thanks for listening.